So what's going to happen in the next maybe couple of minutes? I'm just going to explain what happened in the news lately, and how is it going to affect our decision-making process in investing. Now, the first FAQ, right, that we're going to talk about is the recent news that took place last Thursday. And there is this guy called Powell. Powell announces new Fed approach to inflation that could keep rates lower for longer. So now the question is, who is this Fed, right? Now this Fed is F-E-D, not F-A-D, okay? Now this Fed, right, is a short form called Federal Reserve System. See, and just now remember we talked about this Powell. The full name is Jerome Powell. So Jerome Powell is the chairperson of this Fed, or Federal Reserve System. So now the question is, who owns this? Is it the government or whatever? Now, the governing body, right, there is a board of governors that govern this. And the interesting thing is the ownership is a private ownership by members' banks. So in other words, like as though there's a conglomerate where the banks are involved and everybody come together, right, to form this like a central banking system. And of course, all these members that come along, there must be a leader, right? And the leader, which is the chairperson, is called Jerome Powell. So every time when you read news about a chairperson of Fed announcing certain things, it's going to affect all the economy in US. And when the economy in US is bad, usually you will spill over to Singapore and other parts of Asia. So we don't want US to be in a bad situation. Hi, this is Kaden. Remember to click on the subscribe button and turn on the notification to be notified of our future training videos. Yep. So now, let me share with you the traditional approach of how Fed, right, try to make a balance of this inflation. So this is their old approach. Their old approach is regardless of whatever happened, right, whatever policy that they do, as long as the inflation is lower than 2%, they will come up with policies to raise it up to around 2. Remember, their job is to make a balance because high is bad, low is bad, right? So whatever policy they do, didn't work, whatever number, they will adjust. They will do whatever it takes to go to 2%. But this time round is different. This time round, olden days is to raise and then hover around 2. This time round, what Powell is saying is he's not going to raise until 2. He's going to raise moderately above 2. That's why there's a lot of commotion in the investing world or in the business world. So now the question is, why is Fed, right, taking this new approach? Just now we talked about a new approach, right? But why is he doing that? So during the past, what's going to happen is whenever the economy is bad, there's unemployment rate and so on, right? Low unemployment will always lead to high inflation. Yeah, low unemployment will lead to high inflation. That is the inverse correlation. Yeah. So why? Low unemployment, how can it be equal to high inflation, right? The logic is quite simple. When everybody has a job, it's very difficult for businesses like myself, right, to look for good people because everybody has a job. Right? So you need to attract these good people, right? So to attract these good people, you need to increase your salary, right, as compared to the social norm, so that people will say, wow, you pay such a good salary, I'm going to come over. But in order for them to increase salary, they have to make more money, right? If they don't make more money, how to increase the salary to attract staff? So do you see that all these moving parts are interrelated? Yeah, that's why the unemployment rate will lead to higher inflation. So that is the past. But the current pandemic has changed this mechanism for quite a short while. What do you mean? In March, you see S&P 500 index falls, right, to a new low. So what happened is the pandemic triggered off the steepest. So it doesn't go gradually, like the 2009 global financial crisis, but it went very steep, and then it went to the steepest ever recession this year, and then suddenly the unemployment go up because businesses cannot operate, we are in lockdown and so on, right? So you see, low unemployment rate leads to higher inflation. Then this is the opposite. This high unemployment rate, give a guess. Higher unemployment rate will lead to what kind of inflation? Higher or lower? Lower, right? Because opposite, right? If this low, this high, and this high, theoretically it's low inflation, right? Now, if it's low inflation, remember, it's good or bad? Just now we already said, right? It's good or bad? It's bad, right? There must be an optimum, right? So it's bad. So it's bad, what does it mean? Lower inflation, again, people tightening the belt, no, I better don't buy because in future may be cheaper. Then lower demand become worsen economy, right? So very interesting, huh? Then eventually what leads to a recession. Now, so there is one word that is called rates. Keep rates lower. What is this rates, huh? Let's look at the dynamics, huh? Now, this word rates over here, what the article is referring to is interest rate, which is the banks lending interest rates, huh? So in other words, they want to keep this interest rate low. So let's do a quick recap, right? When they keep the interest rate low, now bank can lend, right? Lend at a lower rate, and we can borrow at a lower rate. If we borrow at a lower rate, then it stimulates economic growth, because now businesses can run, right? Now, but in the past, what happened is they want to keep the interest rate low, so that as long as people borrow, operate the business, when the economy recovers, the Fed will raise the interest rate. Because right now, economy is really good, right? Why should I keep the interest rate low? That's the logic, right? Not everybody is booming. Everybody should be able to afford higher interest rate. So that's the past. But this article, right, and people talk about this, there's this commotion, right, is because this is the new approach. The new approach is what? The new approach is even when the economy improves, they will maintain the low interest rate. Okay, so you can see here, maintain low interest rate if the economy reaches full employment. Yeah, then at the same time, while they continue to hold the interest rate low, even when the economy improves, they want to maintain the inflation rate, right, to be slightly higher than 2%. Yeah, so last Thursday, which is quite fresh, which is just a couple of days ago, right? Now, so when Powell talked about this, suddenly all articles, they keep talking about, maintain low interest rate even when the economy improves, and then inflation, they want to keep, slightly above 2%. So the moment you release this news, give a guess. The market, the stock market, gamblers, speculators, whatever, whoever the investor, are they happy or sad when you hear, interest rate low, businesses can borrow, right? Are they happy or sad? Happy. When they're happy, finally I can hear one piece of good news, happy. What would they do? They'll jump inside the stock market to buy stock or sell stock? Buy. So when they jump in to buy, the share price will go what? Up. So you so-called predicted, inverted commas, correctly. Stocks jump higher at Thursday open as Powell outlines new Fed policy approach. So right now you understand why sometimes share price jump up, right? When the Fed announces certain things. So when Fed announces things, usually there are only a couple of things. Number one, he will announce about the inflation. Another one is the bank's interest rate. So right now you already know if the bank interest rate is low, more borrowing, it will spur the economy, everybody happy, jump in, buy stocks, the share price go up. Okay, Now, so this is the connection. This is one of the logic why recently we see the share price keep going up. And the S&P 500 surpassed the previous high. So the recent high before the COVID-19 was at a certain level. Right now it edged slightly higher because there's more good news. Now, but I foresee a certain problem. Yeah, the problem is even though this power is going to decrease the interest rate so that people can borrow, can stir the economy, that's on the assumption that business operate as usual. Like during the global 2008-2009 financial crisis. That means I lower interest rate, come and borrow. Continue. Once you borrow, go back to your business. Continue to operate. But there is an ongoing public health concern, right? The ongoing public health concern is the community case, which is why MOH keep publishing the community case data, right? Now, this is their community case, not ours. Now, what happened to the community case? Total cases are cumulative, right? It's increasing, right? Now, do you see any sign of flattening? No, there is no sign of flattening. So in ours, we have no idea where this thing is going to go. Then the next one, the active cases, total cases, active cases. There's no sign of flattening, right? So in other words, their so-called community case is increasing, right? Then the worst thing is the death cases. So the question is, what is the end point? Now, I'm not very sure. I'm just giving a wild guess. Will it reach a certain point of time that their healthcare system will collapse? Or is it because Trump made assumption that before healthcare collapse, maybe the COVID-19 vaccine will be readily available? So before it collapses, like everybody jet. Everybody okay. Then suddenly the curve flattens. So I have no idea what's going to happen. Yeah, but there's one thing I'm very sure, that the share price is overvalued.